Thank you very much for joining us for this panel discussion, and thank you to the organizers for doing such a good job as always. This has really become an important part of Geneva's annual calendar. So we're here today to discuss supply chain shifts and agile strategy for trade, logistics, and working capital. Just as an introduction, my name is Richard Watts. As Michael mentioned, founder of HR Maritime. I basically spend my time consulting trading companies when things go wrong, and then teaching people to avoid things from going wrong. And so certainly supply chain shifts and disruptions are something I confront on a daily basis. What I'd like to do before we get started with the panel discussion is to take a second just to ask these wonderful panelists to introduce themselves, a couple of words about themselves, what they do, and why they are an expert that you're looking forward to listening to today. So if we could start off with Clémence, over to you, please.
Hello, so I'm Clémence Avril. I'm head of commodity trade finance for Standard Chartered. I've been in the industry for more than 20 years in BNP Paribas, always on the commodity trade finance side. And now I'm doing a little bit of the same thing with Standard Chartered, and I'm very happy to be here.
Excellent. Thank you very much, Clémence. Looking forward to discussing further. And so, Ernesto, over to you, please.
Yep. My name is Ernesto Vila. I'm the founder of Tech Cargo, which is an MUSCC and freight forwarding company. And I'm the CEO of Capital for Trade. So we kind of sit in the middle of the intersection of logistics and trade finance, supporting mainly SMEs and mid-market companies accessing capital.
Thank you very much, Ernesto. Catherine, over to you.
Hi, everyone. I'm Catherine Lang-Anderson. I'm a lawyer and a partner at A&O Sherman, which is an international law firm, and I head up our trade and commodity finance practice. And I recently discovered from LinkedIn that I've been in this industry for 20 years. Hard to believe because of my youthful looks, I know. But here we are.
We do not believe you. Thank you very much, Catherine. And Raman, over to you.
Hi, I'm Raman Jaggi. I am CFO for the storage and terminal business, and I'm also the head of trade finance for SR Group in the UK. Have been in this industry for 20 years. Pretty much most of my tenure has gone into oil refining and commodities and trade finance. Thank you for having me here, and absolute pleasure and joy to be part of this esteemed panel.
Thank you very much, Raman. And Andrea.
Hi everyone, I'm Andrea Tang. I'm the legal director at FIATA, which is the International Federation of Freight Forwarders Associations. So we represent freight forwarders all around the world. We represent about 40,000 freight forwarders across 150 plus countries. And I'm really looking at the different modes of transport, customs, and legal matters. And previously, my experience has been also in commodity trading a little bit, shipping, and insurance.
Excellent. Thank you very much, Andrea. And I'm sure you'll agree, a fantastic panel and looking forward to a good discussion. So we're here to discuss supply chain and really supply chain disruptions and how we are adapting to this. Now, these disruptions, they seem to be just a constant in our industry, and it's really a question of how to prepare for them. Are those disruptions due to politics? Are they due to nature? Are they just due to people's ego? We're seeing things like tariffs and geopolitical shocks. Companies have to remain agile. They have to build up greater buffers in order to manage these different shocks. And we're looking at this from the point of view of logistics, finance, and working capital. So today we have on the panel people from the banking point of view, from legal, logistics, tech, industry, and we're going to try and unpack a lot of these subjects. We're going to also have the opportunity for questions and answers, so I'm going to ask the audience if there are any questions. Please do participate. But also, if you are using the app, the conference application, then please put your questions there, and they should come up on the screen just in front of me, and then I'll be able to ask those questions to our panelists here and have a discussion as well. So if you've got anything, please do add that. And so just kind of getting started and moving into the subject and almost setting the scene a little bit, Clémence, I'd like to work with you. In our prep call, you were mentioning that financing cycles are getting a bit longer and liquidity is now front and center for commodity traders. How is that changing the way that banks like yourself will be supporting them?
So you're right. I think we all see that financing cycles are now longer. Cash has been tied up for longer. And liquidity management has become a key concern for our clients. And so how does a bank like us try and support them? I mean, we have, of course, the usual trade and working capital, BAU activities, but I think increasingly we are helping our clients go a little bit more in the structured trade finance flow, through pre-export finance. You have more complicated facilities like borrowing bases. Another added value that people should think of is the distribution and syndication. I think when you can bring new banks to the liquidity pool of a client through a syndication, arranging a facility and getting other people to come in, that's also something where banks like commodity trade banks can assist. But beyond, I think, that liquidity management angle, clients and I think commodity firms have become increasingly mindful of capital management. I mean, leverage ratios, and we have seen an increasingly demand on off-balance sheet type of structures. So that goes from receivable purchase to supplier finance, inventory finance, or some types of disintermediation where a bank or a company can slot itself between our client and its supplier, or our client and its buyer. And I think those are the ways that today we have seen new forms of liquidity management and through the new products that the financing institution have been offering to the market.
Thank you. I mean, I know that trading companies are always looking for more and more financing, and so it's a lot of the things you mentioned are very, very relevant. Certainly syndication, and I guess that banks like yours play an important role with being able to bring the knowledge, the experience, the expertise in order to be a lead in these syndication deals, and then bring in other providers who might not be comfortable with it, but are willing to because you are present.
No, totally. And I think that's a conversation that we have on a regular basis with our clients. Some clients said, okay, you go to my banking pool because they know me, I like them. And some other clients will tell me, look, if you want to do a syndication, you have to go to banks which are not banking us because that's where you bring the expertise and that unlocks pools of liquidity for me. So I think that's all part of conversations. It's very relevant to each and every single counterpart or client that we work with. And that's where, there's a lot of value to be made on that.
Excellent, thank you. There's a lot to be discovered in there as well. But Catherine, just bringing you into the discussion, I mean, in your day-to-day work, you work with a very large range of different clients in different regions. How do you help them to structure and execute their deals? And what is the landscape looking like as they diversify their supply chains, maybe they become more vertically integrated, and they are looking to new financing sources?
Yeah, thanks. And I think really what you said, Clemence, really resonates in terms of kind of the types of structures people are looking at. I mean, you mentioned so many different structures, and I think that's what's kind of interesting about our world, right? That there's lots of different ways to access finance. But I think the way we look at things, so because of what you mentioned in terms of having had quite a long period of uncertainty now, we've been very involved in helping borrower clients look for ways to unlock working capital, looking for sources of liquidity, maybe people who weren't so interested in this before looking to do receivables financings or inventory financings or a mix of both. So I think part of our job is to kind of help really drill into what those assets are. Are they bankable? Where are they? Looking at all the kind of legal picture that goes along with that to try and help structure something really workable. And I think interesting what you're saying about syndication as well, because I think that's a theme we're seeing in terms of maybe new players coming in on the financing side alongside existing players, and quite a lot of collaboration there, as you say. People who can bring real expertise to deals and people who are maybe coming in and willing to be educated and really partnering up to achieve great deals. So yeah, never a dull moment and lots going on, I would say.
Thank you very much. And it's interesting that because, I mean, one view of how we use our lawyers is we go to them when we have problems, but a lot of what you're describing there is in the very, very early planning stage. How do you ensure that the clients are coming to you early enough in order to have that discussion? How do you keep that conversation going?
It's a very good point, and we didn't actually talk about this in our prep session, but great plug there. Please come to your lawyers very early. But I think it's just through relationships and through working with people on an ongoing basis and then really understanding the business. I mean, we've just done a deal recently where we were sort of refinancing a receivables deal, and we're refinancing something that we've done before, and just really understanding how the business works and how the contracts work, and the kind of trickier areas and the easier areas just is so beneficial, I think, in terms of getting things done smoothly. And in this kind of market, I think people want to be able to, as much as possible, get things done smoothly and be prepared for different eventualities.
Thank you very much. And I suppose there's a large part of it which is being easily approachable, being happy to have those conversations without suddenly saying we're going to charge you lots and lots of money immediately. But this is very important because people need to come and have these conversations early, because otherwise they can go completely down the wrong path. We'll probably go into that a little bit more afterwards. But Andrea, I'd just like to look at things from the freight forwarders' point of view, because they're often sitting on the front line of disruptions. They're the ones that get impacted first. That could be rerouting of goods or abandoning goods. What are the challenges that you're seeing at the moment most frequently?
Yeah, as you said, they really are at the front line. They're really the ones who are acting as the partner for the importers and the exporters to ensure that the goods go from A to B, to do all the compliance and all the different ancillary services around all of that. So they're often known as the architects of transport, who really are supposed to be the ones who would be organizing the supply chain according to whatever the situation, whatever the needs of the shipper. And I think right now it's really a very interesting time. I mean, I don't even need to talk so much about the complexity, because I think we all know it's a very complex time in the supply chains right now. But on the one hand, you have the various challenges going on, whether it's geopolitical, whether it's in terms of disruptions that are taking place in the supply chain and so forth. On the other hand, you have a lot of new requirements that are taking place in the supply chain, whether it be new ESG expectations, or whether it be in terms of new compliance and information requirements that need to be provided to the regulators. And at the same time, you also see that there's really a shift now geopolitically in terms of which regions are really coming up strongly in terms of emerging in terms of the flows, the capacity. So I think it's really a very interesting time. I think that at the moment it's just important that we try to manage the situation in a way that is resilient and optimizes what we have. I think there's a lot of the time, in these situations, there's a risk for working capital aspects where, when you have longer transit times, you might have longer financing cycles, you might have issues in terms of delays, which can lead to damage and detention charges, which could lead to abandoned goods. So it's all about how to really use freight forwarders or build those partnerships in the supply chain to ensure that we can actually weather those disruptions well.
Thank you very much. And you mentioned some very, very interesting points there. I have one foot constantly in the rice business, because that was where I started in this business. And over the last couple of years, with the disruptions, we saw rice cargoes from India taking 30 days, that used to take 30 days, and now they take almost 90 days for that voyage. And so that creates a whole range of problems, from quality issues, but also financing issues and how to handle them. The one thing that I'm hearing from all three of you so far is the importance of being that trusted partner, working closely with the companies you work with and making sure that they have those conversations as early as possible. Ernesto, just bringing you in here, when we were talking during the prep, you said that you mentioned that the only certainty with tariffs is uncertainty, which unfortunately I think is a little bit too accurate. How do you see companies adapting their supply chains in practice, especially when the origins can suddenly shift? How are people reacting to this?
Well, you're absolutely right. Uncertainty will be sticky. It'll be around. It's not a single thing. There's geopolitical sanctions, new supply chains that need to be created, new relationships that need to be created. And what I see are companies just kind of diversifying their pool of suppliers, almost like a China plus one or region plus one, because you never know today when this is going to shift. There's an announcement made today, and tomorrow there is another announcement. So it is difficult, but definitely prepping and diversifying your pool of suppliers is one of those. Some of the people are doing nearshoring. I see a lot less of that, or stockpiling, but that also comes with the own inherent risk. There's a lot of volatility as a result of the same tariff. So I guess the best bet is just diversification.
And when you say diversification, I mean, when you're talking about suppliers, I guess the suppliers are the goods themselves, but that probably also refers to the service providers.
Absolutely. It's the entire supply chain. New relationships need to be made, understanding the local regulations, because now you're exploring to foreign territory. Financing, you need to have right partners that are agnostic to the jurisdiction. So it is not a single thing. It is a complex thing. From my side, the logistics provider, once again, the freight forwarders, plays a fundamental role in early on giving our clients a good scenario, what to expect in those jurisdictions. So.
Excellent. Thank you very much. There's a lot I want to come back to on that. But Raman, sorry I haven't brought you in yet, but obviously working on the refining side, and CEO, I mean, you're dealing with cargoes of $50–60 million. And as we were just discussing before the call, the prices can shift rapidly. How have you seen that you've been adapting your working capital strategy in the face of these geopolitical tensions?
No, thank you. So look, refinery is a business with billions in working capital invested. We usually operate in high-value trades, so each cargo is around 50–60 million. So our requirements for working capital are usually high in any environment. But we also see in any geopolitical crisis, tariffs uncertainty, that requirement actually gets even more stretched. So look, from our industry perspective, volatility remains our biggest cost. To give an example, a 10% movement in the oil price requires us to have increased working capital by around 150, sometimes to $200 million. We are also seeing the freight cost, the transportation cost going up in recent times, of course, thanks to the geopolitical crisis that we're seeing around, the tariffs uncertainties. Storage requirement certainly has gone up, more from oil security perspective. Of course, there are a combination of other factors as well, which has required us to have additional storage, but all these costs have actually led us to have increased liquidity, increased working capital, and thereafter increased cost base. So this is what we are seeing in the current environment, Richard, in specifically in the oil industry.
Thank you very much. And you mentioned this word volatility. I mean, we hear all the time that traders love volatility. It's really funny because when you kind of throw that back in their face at the moment, they're like, yeah, but not this type of volatility. Not when it's completely random and completely unexpected. So it's interesting how that works. But just, I mean, you touched on working capital there, and I think it's moves us a little bit onto the next area I wanted to discuss. Because as you have been expanding your storage as a buffer against these shocks, in terms of your financing needs, I mean, you touched a little bit on how that changes it, but I'd be interested if you could expand a bit. And also, does it create opportunities beyond just the need for resilience? Do you see opportunities from having this increased storage?
So I'll clarify, Richard, that look, we are in the oil refining business. We are not in speculation. So for us, oil storage is more for our operational purposes. Yes, the storage requirement has gone up, and there are a combination of factors which has led to this. One, of course, is a policy thing where you now have to blend biofuels with the conventional fuels. So that has asked for having additional storage on the side. We see a lot of new fuels out in the market, which is sustainable aviation fuel, SAF, which is used for the airlines. You have HVO now, which is a drop-in fuel. So all these products also need additional storage. Of course, additional storage has also come into a play because of the oil security that I mentioned. But apart from that, of course, with our strategy, wanting to be a national player in the UK also requires us to have additional storage into other strategic locations. So combination of these factors have actually led to increased working capital requirements on our side. So we are looking in the market for structures like the repo structure, off-balance sheet structures, But yes, I would say one of the requirement has been for oil security, but others are also very much driven from the business requirement point of view as well. But we don't speculate. For us, it's more operational requirement than a trading speculation requirement.
Excellent, thank you very much. And it's good to have that clarity as well. Clemence, just bring you in. And, I mean, it's kind of on the back of what Roman's just been saying, because obviously he's talking to his suppliers, he's trying to get the right balance of risk and the transfer of risk from the suppliers to his business. And so we're seeing some of the producers shifting from selling FOB to selling CIF, almost moving into the trading market. How does this change the financing requirements? What role do banks play in supporting that transition? Because a lot of these actors, I mean, we're talking about national oil companies. They have a lot of finance themselves, but probably don't have any part of the knowledge that you have. So how do you react to this?
So I think you're right. We've seen a lot of new entrants on the market. Now, new entrants, I think it goes a few ways, right? You have, as you mentioned, new entrants, which are producers, which are shifting from a FOB to a CIF financing mode. So they're starting to take upon themselves the risk that the trading arms used to take previously. So the risk of freight, the risk of price, the risk of, disruption, et cetera, et cetera. So that's one area of new entrants. But we can also talk about commodity traders that are entering new markets or new geographies or new products. I mean, we've seen people entering metals, we've seen people entering power, we've seen clients entering renewables. So all of that is making the ecosystem a bit more complicated with people that are expanding in areas which were not their expertise to start with. So then how does the bank see that? So the bank also has to adapt, because based on their historical models of, okay, I'm financing a commodity trader, the commodity is going from A to B, now you have a producer behind, so you need to be able to analyze the counterpart, the geopolitical context, et cetera, et cetera. Same for, the other entrants. So I think ultimately there is value in knowing how the trading activity works. We still support the new entrants with working capital, but I think there's also a little bit of mindfulness about, okay, we need to understand their business model. We need to make sure that we can accompany them and sometimes provide advisory, as well. And maybe one last thing that we've seen as a shift really with all of that is recently we've really seen the resurgence of pre-export finance and prepayments, because as the people or the clients expand in all these new markets or new areas of expertise, they also want to secure the supply. And that supply now is something that is going to be key, because everybody wants the volumes, because after you have the volumes, you can do the trading.
I mean, you touched on so many different areas there that I think are absolutely fascinating for me. I mean, this shift that we're seeing across the board, and if you're just looking for a couple of examples, I mean, we have SOCAR here in Geneva, which set up in 2008. Before that, nobody knew who this Azerbaijani company was. Now they're a household name. But we also have companies like ADNOC, which is setting up in Geneva now. We also have Verizon, very present. We've got Amagi, which is the biggest soybean exporter from Brazil. And so we have from both angles. We have the exporters who are coming into the trading world, and we have the importers who are coming into the trading world. And it's interesting, does that mean that is the end for the trading companies? And I find it's really interesting because that doesn't. It means they have to innovate. It means they have to keep moving, and they have to keep moving ahead. And so certainly what you're doing on your side is very important, trying to provide them with this kind of knowledge and this expertise. Subject I'd like to discuss a little bit more. But Catherine, just moving on to you, I'd like to see, are you seeing a shift in the financing structures? Like we talked about asset-backed lending, we also talked about transactional, other approaches. Are you seeing a shift in this area?
Yeah, and first, sorry, because when you came to me, I was like, I've got a lot to say on your previous topic as well, actually, because I think, just briefly, we've been really involved in that sort of, you mentioned the opportunity side, right? So the uncertainty, yes, we need to protect ourselves as far as possible against challenges, but also the opportunities that come from that. And I think we've seen very similar themes around, vertical integration, traders looking upstream and also downstream as well in Europe and in emerging markets. And so on to your next question around sort of how are the financing structures changing. I think they're kind of overall, I think we're just really becoming more sophisticated as an industry. You can tell, looking around the room, can't you, how sophisticated we are as a bunch. But I think we're still staying true to sort of traditional techniques of trade finance and commodity finance, but using them in maybe more innovative ways. So whether that is to help with an acquisition, for example, in a context like we've just talked about, or whether it is somebody who needs to look a bit further and make assets work a bit harder, or maybe a player who isn't as creditworthy, for example, on the payables side. How do we kind of put a wrapper around a payment undertaking and make that more bankable with a name that's maybe not as A grade as some of the other structures that we see. So I think there's lots of innovation going on. I think it's kind of evolution as opposed to brand new types of structures.
Yes, because a lot of the points there, I mean, they have to be reacted to by the trading companies. They have to be managed properly. And we're even talking about metals. I mean, you see an awful lot of pre-financing, as Clémence mentioned, as a way of securing that supply. If the supply is tight, then a good way to secure it is by paying in advance. But then how do you secure that money you've paid in advance? How do you make sure that you do actually get the goods that you've bought? And it's all a question of risk management, really. But Ernesto, just moving on to you and kind of staying on the subject of risk, because we're seeing this change in different Incoterms and changing the risk, changing who is subject to the risk at any one point. What trends are you seeing within your business, and what does this mean for financing and insurance?
Well, the trend that we see is pushing the risk upstream. In the case of commodities, we see more CIF Incoterms. In the case of consumer goods, all the way to DDP, where tariff is no longer my problem. You deliver it to my door. So the shift is upstream, and that means the manufacturers sometimes got to get involved into logistics, customs entry in different jurisdictions they don't have the expertise with. But then again, those are opportunities, especially for logistics providers, that we can come in and accommodate all these type of things. In terms of the funders, well, there is more counterparty risk. So that shift of risk upstream also touches the funders. So, it is complex, and it all has to do, I guess, with the relationships with the client and the funder, fundamentally.
And do you find yourself being a part of that discussion? Do you find yourself influencing that discussion?
Yes, most of our funding partners bring us in the conversation precisely to manage the collateral, and that gives us some sort of certainty. At the end of the day, on a DDP scenario, on the tails of a good debtor, it matters at what point is that obligation recognized. So there's not a bulletproof solution, but provided that the funder controls the flow of the physical goods, they'll feel certainly more comfortable than just on the paper. So for us, it's a new paradigm and a new opportunity.
And I mean, as Catherine mentioned, it's often about identifying what the opportunities are and not just focusing on kind of what the risks are, which often is the case. And so, I mean, just moving on, we've talked about quite a few different subjects related to the financing working capital, and then how we are going to be managing that, how it's going to be managing as business goes forward. I'd just like to move a little bit into the logistics and disruptions within logistics now. Before I do that, I'd also like to emphasize that there is the opportunity to ask questions on the application. So I don't know if there have been any questions. Jack will let us know, I'm sure, if there are any questions. Before I do move on, I'd also like to ask were there any questions from the audience about some of the subjects we've been covering, and if anyone would like any of their questions answered by this wonderful panel. It always takes a first question, and then suddenly there's an avalanche. So if there is a question that comes up, then please don't hesitate. I'm going to stop and ask again. I've got a lot of questions here anyway, so don't worry. We're not going to stop and for lack of things to say. But I just want to make sure that there are questions from the audience. Then please do let me know, and happily to let you jump in. As I said, moving on to logistics and disruptions, Andrea. you mentioned quickly kind of abandoned goods, force majeure declarations as well can leave freight forwarders with heavy demurrage and detention charges. How do you help clients manage these risks? How do you help members manage these risks?
Well, I think in terms of abandoned goods, one thing that we always advise freight forwarders to do is to really ensure that they conduct due diligence. You know, I think that we saw abandoned goods a lot, not just now, but also during the COVID period as well. And one thing that we always said was that in these situations, it's not that new risks are necessarily being created per se, but it's more that it's shedding light on where there may be holes and where there may be a need to strengthen some of the practices. So I think due diligence and contract management practices are really key here. And this is something that we're really trying to support the industry more in doing through also digitalization. So, for example, at Fiata, we have our electronic Fiata multimodal bill of lading, and within that, you know, we have the digital identity, we use track and trace, we use verification, and all of these tools together have the potential to further strengthen these practices in terms of due diligence and in terms of each player in the supply chain being able to verify what's going on. So it's not to say that that really mitigates all of these charges, but I think this is one area that can really help to mitigate some of the risks involved. And then, of course, I think one thing that we do try to, in general, advocate for, which I know is quite difficult because there are a lot of actors in the supply chain that are involved to do this, but I think we do need more communication amongst all the actors because, for example, just knowing, you know, when is a container going to be ready to pick up, that can already have, or where the container is along the route, that can have a huge impact in the costs that are involved later on. So this is something that I think probably we can still get better at, and this is something that technology could also help with as well, but it really comes down to having these partnerships and having this collaboration.
And it's interesting you mentioned that because technology can assist an awful lot. And I always find it funny because, I mean, if I order some food, in fact, I don't do it very often, but if I were to order with Uber Eats or something, I can track exactly where the food is from the moment it's been prepared to when it's been picked up to when it gets to my front door. If I order, some are better than others, but maybe DHL or TNT, I know kind of which day it's going to arrive. And then are they going to ring my doorbell? If I'm lucky. And so these are all things that technology can create a huge, huge opportunity within that. In terms of, you mentioned the digital bill of lading, the electronic bill of lading. How do you find the uptake of that? Is it being taken on board by companies, or are they a little bit reticent?
I think this is something that is still very much in progress. There are many companies that are using the EFBL already, but of course this really varies also according to region, according to perhaps the type of freight forwarder, and also in terms of the legal and regulatory environment that's involved. Because I think here, you know, it's not just about the freight forwarder taking on the EFBL, which already in itself can sometimes be a challenge because it's also a change management consideration, changing the mindset from paper to digital. But also it is a matter of, the questions are customs going to accept the EFBL? Is this going to be legally recognized in case there's a dispute? And this is something that we are continuing to work on to ensure we have this interoperability across the supply chain. But here again, I keep saying partnerships and collaboration, but I really think it's true because, there are many digital initiatives going on that are all, proclaiming to, be solving an issue. But at the end of the day, what you don't want to end up with is fragmentation and having many different initiatives and many different standards and everything. So here we continue to really advocate for the legal harmonization, but also the technical interoperability aspect so that all the systems can speak to each other. And this is something that's also important to ensure that smaller players or players from maybe less developed countries are not then inadvertently shut out of the market as a result.
Okay, I mean it's very interesting. I guess that it's also important in a position such as yours to avoid playing the kingmaker role of choosing one particular company and promoting them above the others. I'm quite involved in electronic bills of lading, but on the chartered vessel side. And so I work with a company called Secro, and it's a really interesting space because bills of lading are different things for different people. And there are so many different actors involved. One of the issues that we come up against is, first of all, the need to transfer the ownership of the bill of lading, which I guess in the freight forwarder is often less of an issue. So you take away that complexity to a certain extent. And also the importance of the bill of lading as collateral to the bank, as security to the bank. And so it kind of brings me on to a bit of more of a general question that I'd like to bring up. And it's, we see slowly tokenization. Tokenization of assets. We see bills of lading, which are created as a token on a blockchain, but we can also imagine other documents as well. Is this something that is something you're experiencing? I'd like to bring the other actors in as well, but first of all, Andrea, are you experiencing this? Is your EFBL tokenized asset or not presently or plans to be?
I think tokenization is not yet, it's something that is really we're not seeing as something so prevalent yet in the industry, but I think that there is the potential there. You know, now we see, for example, there's recently been the legal developments at the UN level, which could potentially be something that could be adopted in terms of the Negotiable Cargo Documents Convention, which would support then negotiable cargo documents in EFBLs, both in paper and in electronic form. And I think that once you start to have, you know, this widespread legal recognition there, then you then open perhaps more opportunities for then having, these kind of token-based securities being linked then to EFBLs, especially because this would also be something that would be potentially more widespread in terms of financing usage as well.
Excellent. Yeah, and as you said, it's very complex, and certainly the legal framework, because in England you have the Electronic Trade Documents Act, which is obviously very useful because most bills of lading are issued under English law, whereas in Switzerland you don't. But in Switzerland then you have laws regarding tokenization, and so banks in Switzerland can take a tokenized bill of lading and consider it to be an asset or collateral under the Basel regulation. So it's massively complex. Ernesto, this is something that during our prep call you mentioned that you have some experience of looking into. What are your thoughts about tokenization of documents, and is this likely to be a big change?
Sure. Well, I think the technology and the tokenization is here to stay. Early stage, to be quite honest. There is a lot of fragmentation for the most part. For a freight forwarder, we can tokenize our bit of lading, our house bit of lading, but at the end of the day, a freight forwarder is dependent of the major liners, and every liner has their own ambitions of having their own bit of lading. So, and there is no interoperable, so that's a big problem. So until that is in play, there is really very little use from a freight forwarding perspective. Yeah, for a funder, however, tokenization means many things. This is transferable title, fragmentation of that title for funding, a multiple funder type of structure. So I think the technology is here to stay. More adoption is needed, and I think there is a huge gap on generation. For example, my kids today are native crypto. They trade meme coins today. And for us, the more older, it's very intimidating technology. There's no one to call. There's no one to say you forgot your password. So once you transfer a token, it's gone forever. So still, from the user experience, a lot to be done.
And it's interesting that because, the tokenization, basically linked to a blockchain, it's something that there's a lack of understanding. There's a lot of fear. A lot of people, as soon as they hear blockchain, they hear Bitcoin, and they think, oh, okay, that's risky. And it's just very difficult to manage. And so, Catherine, I was just curious, is this something you've had to build up in your practice, expertise in this subject? Do you have some of your clients coming to you and asking you for your opinion on this area?
Yeah, we have, and it's been quite a learning curve, I've got to say. So one thing we've got actually in the firm is this sort of tech incubator called Fuse. The idea being that we can have tech companies in who obviously understand tokenization and other sort of legal tech, and then we've got the lawyers who work with, and so we sort of learn from each other really. And it's, I mean, you summed it up really well, Richard. It's just we're at that point where I think I agree with you, the technology is here to stay. The legal side has to catch up a little bit at the moment, which it is doing rapidly. But, so you mentioned about English law changing, for example, on electronic trade documents, but the fact that other jurisdictions might not have done or might have done it in a slightly different way. And that conflict of laws issue is quite challenging, actually, even for our litigation colleagues. When you have a conflict of law question, it's quite tricky. I mean, luckily, I think as a market, there's a high degree of sort of market practice and trust, and I expect all of those kind of qualities will carry on, but we're just in a phase of figuring out how to make the most of all of this new technology. I think when I was in Heathrow Airport last night, all of the adverts were for AI or Saudi Arabia, and I was like, that pretty much sums it up, actually.
Makes sense. Makes sense. I mean, thank you. It's funny what you say, that it's been a very steep learning curve for you, because we have this assumption that the lawyers already have this vast amount of knowledge, and sometimes it is a question of we come to them with a question that they don't necessarily have, and they have to then research and come back with a good answer. And so it is I'm always very impressed with how quickly and well done that research is often, and that for me is the choice of how you find a good lawyer. It's somebody who can actually take something that's incredibly complicated and actually make it understandable to those of us who don't understand the complexities. Clemens, just bringing you in on this discussion, and we're talking about maybe electronic bills of lading, but the wider discussion. I mean, digitalized documents. Are you embracing them? Are you cautiously hesitant?
So, I think, as my fellow panelists said, I think it's here to stay. Electronic BL, we've brought it. They've been here around for a while, and they haven't been widely adopted. I think there was a data from our teams which said that less than 5% of the BLs are electronic today. So we still got a long way to go because of regulation and because of the interoperability of the systems where people don't talk to each other. So it's very difficult to follow the transaction from point A to point B. Now that brings the question of the tokens, which is probably maybe going to be a faster adoption than the EBLs. I mean, I don't know. But we have been, as an institution, we've been on the forefront of all this digital innovative and innovation, and we're really trying to first facilitate payment through stablecoins. I think that's something that we can do. We can be custodian of the because remember, once you have a token in a stablecoin, you need an account to hold it. So you need a bank which is capable of keeping the stablecoin for you. As you said, it disappears, so you want it to appear somewhere. So that is a service that, as an institution, we've been working on, have that custody of the stablecoins. And then you go a bit further to, okay, the smart contract. Could I have a contract which is a token, or a right to a contract which is a token? And that brings us back to the legal framework, which has not been tested. So, we've been looking at solutions where we can maybe finance a token, but honestly, in between, we'd rather have the English law contract as well. So are we going to do it simultaneously and see whether that works out? So all of these are questions that we're facing, and we're really trying to dig upon, but we have to go together at the industry. The bank cannot go faster than the legislation or that the lawyer's knowledge, unfortunately. And then the tech, of course. So it's everything has to come together.
And it's almost doubly complicated for you, because not only is the bill of lading under one jurisdiction, but then the vessel might be in a different area, but then you've got offices all around the world, you've got your clients all around the world, and so it's just a complete mess of different laws and jurisdictions and how to navigate this. And then you've also got the banks.
Keeps me in a job.
Keeps you. That's why we do it. No other reason, but thank you for doing that job. And so just, Raman, just curious, so have any of your suppliers presented you with an electronic bill of lading?
No, not as yet, Richard. I think we buy close to around 12 cargoes of crude. We export around 20 cargoes of product every month. But of course, we have not come across as much adoption of an e-bill as yet. It is happening the very conventional way, the bill of ladings, and no, not as much. But of course, we hear a lot. We are seeing a lot. I'm sure there is a lot of developments happening. There are a lot of solutions being worked upon in the background, but maybe adoption is taking some time. But I'm sure it has to happen.
I think you've just summed it up. It has to happen, but when? And maybe the next 6 months, or maybe in 50 years. Somewhere between the two. But there are a lot of other subjects that I would love to have had the time to discuss here today. There were subjects about ESG and where it stands with your business at the moment, and also AI, how that can affect this business, and there are huge opportunities there. Unfortunately, we have got towards the end of this panel discussion. As always, it's gone way too fast. I found it very interesting, and I would like to say a massive thank you to the panelists, to Clemens, Ernesto, Catherine, Raman, and Andrea. Thank you very much, and thank you for your attention.